Hello, my name is Eddie Tofby. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. First one is Euro-Dollar. A bearish long black Mariposa on Friday. As suspected, the usual possible bear spike on Thursday turned out to be true, and overhead, previously highlighted, congestion combination of the flatlining short medium moving average, currently at 121.52, and the key March 2018 low at 121.52, and most importantly in this instance the neckline of the possible reverse head and shoulders formation, currently 121.61, constructed over this year so far, kicked in and forced prices lower. The market dropped as far as the first admittedly weak looking support. That was the very recent 38.2% Fibonacci level at 120.63. However, it is once again worth noting that just below we have the rising medium moving average coming through at 120.30. So far today, try back up to the overhead short moving average, currently at 120.99, which has, interestingly, held before a fresh attempt through the lesser Fibonacci level below at 120.63 and down to the medium moving average. Cable, aka sterling against the US dollar. Second bearish black crow on Friday, and we're back where we started from the middle time, currently at 139.05 of the important late June to late September 2020 bullish shift pitchfork. Only this time we're looking at it as support rather than resistance. This pitchfork has shown the bullish angle of attack since November last year. Below this middle time we have support from the recent congestions at 138.15 and in a band 137.5 to 136.5. So far today, test up to the next overhead resistance level at 140 even, but a pullback lower. We're now between that resistance and the rising middle time. Euro against sterling. A high for last week on Friday, but also a bearish black crow and a possible tweezer top as well, closing right on the April 2020 low at 86.69. My suspicion that the short moving average, currently at 87 even, may act as a proxy for a downtrend turned out to be true. Meanwhile, we still have below the target X2 for the head and shoulders top in the 85.15 area, and target X1, the target for the recent sideways triangle. Let's wait and see on those. So far today, a follow on lower from Friday, though conservatively it seems at the moment. US dollar against the Indian rupee. I said in my commentary on Friday, never underestimate the power of an unleashed force. A huge gapping move higher that pushed up over the November 2020 to date downtrend, currently at 72.76 and about to be reassigned. The short medium moving average currently 73.09, the medium moving average currently 73.48. The April 2020 to date downtrend plus 50% Fibonacci levels at 73.68 and 73.84. In fact, the only thing that stopped the market's rise was the declining long moving average, currently at 74.03. So far today, we've had the obligatory reactionary move back down, opening below the 50% Fibonacci in September 2019 to April 2020 move at 73.68 and dropping below the medium moving average, though not as far as the seemingly supportive flatlining short medium moving average. Just below that we now have the gap 72.76 to 72.93, and interestingly today is looking quite like a indecisive spinning top at the moment. US dollar against the Brazilian real. A second interesting bullish white soldier on Friday. Now on Thursday we had a first close right on the lesser Fibonacci line at 552.91. This is the overhead flat trend line of a possible bullish ascending triangle formed this year that I've been harping on about. On Friday we had a clear close over it, so it appears time I gave a possible topside target for such a pattern. In this instance, target X would be in the 576.60 area. Now, a word of caution. Being so far along the triangle increases the risk of a false break, so watch out. US dollar against the Mexican peso. Another new high for 2021 on Friday, but it was also an indecisive doji cross right at the height of the market. Reason why? It was the just the overhead ever so gently declining long moving average, currently at 21.1665. This meant that despite breaching the overhead bull channel line, currently at 20.90.5, for a second consecutive day, there was no close over the line, and this was important. So far today, a pull back down as a counter to recent bullishness, I suppose, but this is seemingly short-lived right now, and we may be looking at a hammer pattern instead for today. Very interesting. Thank you for listening. This short version broadcasts essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. And here comes the final bit.